Next up, we're looking at finance, and again, I'm very pleased to introduce Tim Boag, from Managing Director of NatWest.
Thank you, Andrew. Good morning, everybody. I must say it's a real privilege to be here, have this opportunity to speak in such a large auditorium with such a large audience and such a diverse one as well. So my day job is I work for NatWest. I run London and South East, and I engage with our customers. So that's 10,000 businesses. I don't engage with all of them every week, but over a course of time I get to meet, and that is the fantastic part, I get to meet many of them in different sectors and different parts of the economy. So I think the first thing to say, and it's sort of been suggested already, it is very early to draw conclusions about the future in finance or indeed many other areas of society. What I can say, though, from a finance perspective and from a banker's perspective, finance is about understanding our customers and understanding their businesses. And that's kind of the challenge that we've got as bankers during this period of change. What I'd like to do over the next few minutes is just touch on a couple of the themes that are emerging in the economy that we know will be affecting businesses. The demand and supply for finance, I think there are some interesting forces at play there. And very briefly, just the role of a commercial bank, which is often seen as a traditional source of finance for businesses. So what's been happening? What do we know? If we look at the economy, there are a couple of graphs up here. Two things we do know have happened. Firstly, as has been mentioned, sterling has depreciated by about 12%. And it's not been a good sort of week for sterling either. So that uncertainty around the value of currency continues. The second thing we know, which is the graph on the top right, is that manufacturing input prices have increased by about 6%. Okay? It's probably a bit too early based on quarterly data to draw conclusions about profits and investment, but actually if your costs go up, then there's a chance it's going to have an impact on your profitability. And certainly if you take sterling depreciation and just look at some of the factors there, what does it mean for businesses? Well, if you are importing goods and services to as part of your supply chain and that go into your product, if your costs have just gone up 10%, then you would think that would be a bad thing. On the other side of that coin, as has been debated for some time and has been mentioned this morning, our exports, the products we sell into Europe, US and other parts of the world, have become cheaper, so arguably we will be more competitive. However, it's a very complex matrix, inputs and outputs, different types of businesses. So I go back to my earlier point. The role of a banker in thinking about finances to try and understand some of those forces at play and how they affect different industries and different sectors. Based on some of the research that's been done, it would suggest that services could be a beneficiary or less hard hit than some of the other businesses in, say, manufacturing. There's been a debate this morning about food prices with Unilever and Tesco, food, clothing, raw materials like metal. These are all things that are difficult to pass the costs on to when you're importing them, certainly when you're then putting them into a product which you sell overseas. So sterling depreciation definitely have an impact on businesses, and I've met a number of businesses in manufacturing and travel, for example, where the effects can be quite different. So what's happening on supply and demand of finance? I think there are a number of different influences here. Just to touch briefly on demand and some of the things there, I think demand is really all about confidence. Confidence leads to investment. If businesses are investing, then they require finance. And at the moment, confidence is mixed, I would say, and certainly fragile if you look at the upper end of the corporate market. There was a survey issued by Deloitte earlier this week, which is a quarterly survey, where they speak to about 130 of the CFOs, that's the chief financial officers of the largest businesses in the UK, private companies and public companies. So what are those CFOs saying? What are they saying at the moment, 3 months from the vote? They're saying that they expect investment spending and hiring to weaken over the next 3 years. Their priorities, the top two priorities, are cost reduction and building up cash, and 2/3 of those CFOs think that Brexit will lead to a deterioration in the UK business environment. So not a very pretty picture when you think about confidence. On the other hand, we have seen some inward investment into the UK. There are, and in my business, I've seen businesses acquired by overseas companies that see UK companies now being cheap. And actually the UK has become an attractive place for many businesses, overseas businesses, for M&A because the assets they're acquiring are now cheaper because the currency's devalued. So CFOs are cautious in terms of allocation of capital and taking on risk. and that will affect demand. When I look at what I see day to day in terms of the bank and our work in progress, so we forecast forward the next 3 months of our work in progress, and we look at those lending opportunities, those loans that will be drawn during that period. Anything that's over 50% we count as sort of real work in progress. And that has been pretty stable since the vote. It certainly dipped. Some of those large transactions paused through the summer. Many of those have come back. And I think in the smaller end of the market, the small businesses are getting on with their lives. They don't have time to sit on their hands and think about what Brexit will be, what it won't be. Yes, there'll be some concerns. Yes, they'll have to adapt their models. There'll be some positives for some, there'll be some negatives for others. So they're clearly thinking through strategies, but they're still investing, and that's what the short-term evidence would show. Longer term, it remains to be seen whether that momentum that we've had in terms of small business lending will continue. Just very quickly on the supply side, because I am conscious of time, I'm not going to go through all these, but there are a couple of things worth mentioning. It's quite interesting when you look at commercial banks and what's driving their profitability. Traditionally, commercial banks like NatWest, like Lloyds, like Barclays, make money on both sides of their balance sheet. So they'll make a bit of a spread. It's the money that we save with them and we put on deposit, they take and they lend it to businesses. They make a bit of money on the deposit, they make a bit of margin there, and they'll make a margin on the loans that they lend. When interest rates are so low, as they are now, it's very difficult, virtually impossible, for banks to make any money on the deposits that people give them. Which means that the other side of the balance sheet has to work harder to compensate for that, to deliver bank profits and growth, etc. So loans and advances to customers are really important. So in fact, the supply of bank finance is pretty strong at the moment because banks have to utilise the deposits, and they also need to make some money on they need to cover their costs and make profits. So therefore, they are lending money, and that money is available to lend. In fact, liquidity and finance, not just banks but bonds as well, and the price of that finance is in pretty good place at the moment. So supply, for the time being, is certainly, I would say, strong and hasn't dipped. The other aspect just worth mentioning is the government. Governments on both sides of this sort of Venn diagram. Clearly they can influence demand by spending, and there is some talk about the budget in November, and question mark about will the government increase spending on infrastructure, will they increase spending on housing. If they do that, that will increase the demand for finance, because all the businesses that are involved in those projects will benefit, and they will need working capital and loans to invest and to take on new business. The second thing on the right-hand side in supply, we've heard about quantitative easing. That's Bank of England policy. That's about getting money, buying up the bonds, getting money back into those investors so that they can actually look for alternative sources for use of that capital. So I think Bank of England policy and government policy are also very important in influencing both supply and demand of finance. Finally, just one thing I'd like to say on the role of banks. I touched on it at the beginning, but the banks need to be there to support their customers. So banks need to, I think my CEO used the word guide customers through a rapidly changing environment. And I think we do need to do that, and we need to give people comfort that finances are there at the appropriate level, in the right form, when they need it to help them grow their business. And some of that will be short-term to help businesses get through some blips. Some of that will be longer-term as they continue to invest. And to do that, banks need to understand those businesses. So, we've trained all our bankers, retrained many of them over the last 12 months to have really good conversations with their customers around strategy and understand, particularly with the changes going on, what's happening with their input costs, their output costs, their customers, their suppliers and so on, and how that strategy might need to change as a consequence of the vote and any changes that Brexit brings. Secondly, we need to be out seeing our customers. There's no point sitting in the office waiting for the call. If we're not out in our customers' premises and their businesses, we don't and we won't understand them. And the third thing is, which is really what this graphic is about, is really about signposting as well. So banks are an important part of the financial community. They can't and won't do everything. But what they do have is, I think, as being part of the centre of that ecosystem, is a responsibility to signpost and guide customers to the people and the contacts who can help them with whatever challenges they face. So very briefly, quick conclusion. It's too early to draw too many conclusions about finance, but certainly demand has been holding up in the SME end. At the upper end, it's a little bit fragile. Supply looks stable, and I think banks have an important role to play proactively in getting out and working with their customers on the changes that they will face. So thank you very much for listening to me.